Let's get some insights on the news shaping the markets. For that, we welcome in Rebecca Walser is here. President, Walser Wealth Management. I am glad you were here. Last time you were here, you talked about a 30% pullback for stocks. I want to get to that. But it's interesting because we got our GDP print of 3% that's the final print for the second quarter. And the outlook for the third quarter is much of the same of the 3%. So on the one hand, it looks like the economy's rock solid, but on the other, people are speculating that it may be weaker than it seems. What camp are you in and why?
Well, I don't like to say that the Fed ever plays politics, but certainly to do a 50 basis point cut, Nicole, last Wednesday was very stark, but was even starker was the 8 more expected cuts to come, 2 more in this year, 4 more in 2025, 2 more in 2026. So when you have a Fed that's forecasting and starting off with a 50 basis point cut, that's aggressive. Nicole, that has only really happened 3 other times. It happened with the dot-com crash in 2001, it happened in 2007 right before the global financial crisis, and it happened in 2020 with coronavirus. So discount coronavirus because that was obviously a unique outlier. And you've got 2 massive, since the turn of the millennia, we cut 50 basis points before the 2 largest economic corrections that we've had since 2000. And so that pattern is going to stay. In fact, I think it's going to be worse this time because even though we did get a final print of 3%, the GDP is heavily supported by consumer spending, Nicole, and we're looking at savings levels, and they have gone to the negative since 2023. So we don't think that consumers are strong enough to keep it going, even if we're getting some revised unemployment numbers to the downside.
And there are still some things that are holding up and at high levels, right? Housing, for example, right?
Yes,
I mean, though the latest new home sales showed a little bit of weakness, but some thoughts there on housing.
I think it's still an inventory problem. So when you look to housing as a leading indicator of what's going to happen, you're not going to get a really good market-based response because we do have an inventory problem. So as long as you have an inventory problem, it's going to create a higher demand level because there's just not enough supply.
What about the stimulus that we saw from China? Today there was more, but throughout this week, let's say, in different forms. It wasn't just one part. Is that enough to give a boost sort of around the world?
So what I really look to when I'm looking at global demand, and you've hit the nail on the head, by the way. This is where I'm telling you the global demand is dropping. So China knows that they are a controlled economy. They have a lot of stimulus going back in. They're going to try to turn it around. But when you look at crude, Nicole, that's the tell. If you see crude dropping from 75 to 69 in a short order, then you know the global demand is slowing. And if global demand is slowing, then the supply chains are going to slow down and the world economy is slowing down. So as much as these economies are trying to stimulate, like China, it's just like our Fed coming in saying we're going to go back to quantitative easing. Is that going to help? Yes, but does that change the overall dynamics of the global market? No.
What about the election? Will your view change if the administration changes? Because right now you're calling for 30% pullback in stocks.
I really am expecting to start to see a lot of the machinations this coming week, next week, because it's going to have more time to have immaculated down to the market. But the election, Nicole, I'm expecting disruption. I really think Americans need to understand that we're not in a normal cycle. This is not a normal election cycle. You just look at all the things that have happened. And I think there's going to be a lot of, unfortunately, civil disruption in America. I know that governors are preparing for it. The federal government's preparing for it. So I think Americans need to get on the same page and realize there's going to be disruption.
Yeah, well, that obviously could be counterproductive in many ways and costly.
Yes.
Whether it's to businesses or shutdowns or worse.
Yes.
I mean, God forbid, worse.
Yes.
What am I leaving out when I think about the dollar? The dollar's been a little weaker. I mean, where does that factor in, do you think?
Well, I really worry still about the Japanese yen and the dollar and their relationship because of the carry trade.
Yeah.
Everyone thought that the carry trade was unwound in 2 trading days, August 5th and August 6th, with turnaround Tuesday. That is ridiculous. This is a 20-year, decade, 2-decade in the making problem. It's not anywhere near from being done. And so as the dollar weakens, we have to worry about that.
It's interesting because Secretary Yellen is saying we're on a path to a soft landing. You think we're in a recession right now.
Absolutely.
What tells you that right now we're in a recession? What's the indicator to you?
I love the indicators that were always indicative of recession, but now all of a sudden, for some reason, because Yellen keeps funding our government with 2-year treasuries instead of the normal longer term. But the SOM rule being triggered, unemployment is absolutely showing us recession now, and also the disinversion of our interest rates from the 2 and the 10, 2 years plus, and them staying disinverted, Nicole. And the gap is widening from between the 2 and the the 10. So we are disinverted, and it tells us we're in recession now.
Is there money to be made in the market that you see? And
There is, but there is going to be quite a disruption. It will come, and that is when I would buy back in. I would not. This is not the market to buy into right now, from my perspective.
What about shorting double leverage?
Well, I mean, I look at the QQQ. That is the problem. Like NASDAQ and the QQQ and where it's headed. If you look at the momentum of QQQ and you look at the leverage you can get in NASDAQ, we have seen that we've kind of capped it out. So I'm telling people this is the time to brace, to understand the political disruption, global disruption, potential World War III, and we will get a pullback. And that's when I go in, guns blazing, buy everything for cheap.
That's
and
it
will happen.
Yeah. How about the PCE on Friday? I mean, do you expect, because the PCE today within the GDP report was pretty status quo. You expect anything different tomorrow? Because there are concerns that the Fed cut 50 and that inflation could still rear its head, and then we'll have to sort of undo some of that.
I know, and that's the hard thing. But PCE had already showed us last reading that it was still sticky, you know? And then we saw in the CPI, we still saw stickiness in core. So what I think is that the Fed is going to disregard PCE for right now. They said all along inflation, but now they know real recession is coming, and that is what's more important to them, even though they don't announce it.
Yeah. I mean, when he was speaking that day, he said he was looking at other reports besides the report of Bureau of Labor Statistics about weaker unemployment, and that's why he was cutting 50 to sort of keep things as they are, and that we might see revisions of BLS, and sort of that made me say, well, and why do we wait, for the Friday number once a month? Anyhow, okay,
we wait for that Friday number, Nicole, to give the stock market a boost up, because they love the first read, right? The second read that comes out and takes on an annualized basis 818,000 jobs away, no one cares. So it's just unbelievable.
Yeah, good to see
Get it together, BLS.
Thank you so much, Rebecca
Thanks,
Walser.
Nicole.
It's always great to have you on the show. Walser Wealth Management. Thank you, Rebecca.